Yo, what's good? This your boy Jeff with Deep in the Bag Trading, where yesterday's price is never going to be today's price. Just want to go ahead and continue off of the last video. The last video, if you watched it, FX Essentials, basic market patterns that everybody should know, that every trader should know. And then also in that video, I gave a pretty light introduction to market structure, basic market structure, that being just knowing what the trend of the market is and how to trade according to that trend. So today I want to go ahead and cover that just a little bit more in depth. I think this probably will be a more shorter video. We'll see. Um, but yeah, let me just go ahead and get started. So basically, what I need every early trader to know is that there is not a single asset on this market that is going to move straight up, okay, and continue on forever. Neither is it going to move straight down and continue down forever. And I'm trying to find my freaking okay. So if you look at any trend in the market, okay, yes, the overall trend, excuse me, still feeling a little bit sick. The overall trend of the market from say here on this is the US 30, looking at US 30 today, from here to here was overall up, right? Okay, so we can all agree on that. But the market will not move in a straight line. Okay. What goes up must come down. And on the way up, you have these spots where you will cool off for a little bit, right? Sorry about that. But yeah, you'll have spots where within that uptrend, you're going to move up and then you're going to cool off. You're going to move up, then you're going to cool off. You're going to move up, then you're going to cool off. Okay, and that's very common. Okay, that has to happen because what you need to realize is that there are people driving this move. There are buyers and sellers. Even in this huge uptrend, there are still people that are shorting the market. And when you have people that short the market, you have subtle moves like this in an uptrend. This overall trend just tells me that right now the buyers are winning. There's a lot more buyers in this trend than there are sellers. So yeah, I mean, the buyers get a couple of hits in here and there. Think about it like two boxers fighting, and the buyers right now are like the Mike Tysons, okay, and the fucking the sellers are like the Jake Pauls. Not like today's Jake Paul. I'm talking about like Mike, like prime Mike Tyson versus Jake Paul. Because I don't know what that boy talking about, but Jake Paul not doing shit to Mike Tyson in his prime. So that's a whole nother video. But anyway, think about it like that. Like you got two fighters, okay, and the buyers, okay, the buyers in this market are like the prime Mike Tysons, okay, and the sellers in this market are like the little man, all right, in the ring. And yeah, the little man's gonna get some hits in every now and then, okay, but for the most part, the buyers are winning the battle here. The buyers are winning the battle, but you still have to respect your opponent and know that there are going to be areas of cool off and areas where it goes on a run. Okay. And those areas of cool off will lead to ideal points of entry. So the main basis behind being successful in trading in anything, period, is just being in the market at the right time and in the right direction at the right time. Because with Forex, or trading, things like US 30, NASDAQ, you can sell and buy. You can short and long. But you have to be on the right side of the market at the right time. Okay. So if you're buying at this time, you're winning, even though there are certain areas where the market cools off. You're depending on your entry, you're still in the blue for most of the time. Okay. And what this breaks down to is just higher highs and lower lows. That's it. Higher highs and lower lows. If I see the market is making, if I see the market is making higher highs and lower lows, I am not going to sell. I'm not going to be targeting sell entries. Now, if I really want to, right, and I still think it'd be foolish if I really want to. I could target some sell entries. I could get in and target moves like this where the MACD is bearish and coming back to my 50-day EMA. Okay. But I don't recommend that because why would I take this move when I can take waiting for that entry to happen and getting in on the 50 where my MACD is bearish turning bullish, okay? And I am at now a lower, or excuse me, a higher low in the market, and I can take advantage of this whole trend. Why would I take the sells in here, which are like the trends within the trend, when I can take the entire trend? It's basically that simple, okay? That is market structure. That's market structure. It's just knowing the trend of the market and knowing where when you're making higher highs and higher lows versus when you're making lower highs and lower lows. And in this case, you're making higher highs and higher lows. And what do I mean by that? So this would be the start point of that trend. Okay. And if we look, that's the start point. We made a high here. Okay. Then we made a low. We consolidated a little bit. We made another high here. It actually got up to this point here. And then we made a higher low. Actually, it's just about even. But what's key to note, what's key to note is that the previous high, right? When the market cooled back down, that high or that zone of consolidation was not broken. So what I'm specifically looking at is when the market took back off to make that high, I noticed that a low was made. So really, the lowest point of the consolidation would be considered right here. Okay. That low was never broken. We actually retested that area of consolidation and then we continued upward, okay, to make a higher high. Okay. So that would be considered a successful lower high, right? So that was a successful successful higher low. Sorry. So that was a successful higher low. That held, we made a higher high. Okay, when we came back down, we did not break that area. So this is my successful higher low. We come back up and we make a higher high again. Consolidate, this is now considered the low, the higher low. And you see where I'm going. We make a high again. If you notice, every time the market comes back down, it never breaks this level or the low before it. It can never break the low before it. So this is a market that's making higher highs and higher lows. It's that simple. And then you see here, so we consolidated. It looks like we consolidated even more here. We made the highest point right here. The low that led to that point was right there. And then you have to consider maybe we're going to start selling, right? So we get to consolidation here. We do break below the previous higher low that made that high. But what you notice is that you keep getting rejection after rejection after rejection as well. It never closes and retest that high, or if it would have closed below and retested with conviction and gave me another move to the downside even lower than that, now we know we might be looking to move lower. And we're still only looking at the 5-minute time frame too. I haven't even told you about top-down analysis yet. So really, this is still considered consolidation where, excuse me, where the bears, they did make some good moves to the downside, but every time they did, we came right back up and the buyers came right back in and stepped into support price. So there's not a full move to the downside that's been confirmed yet. If I would have seen it close below that higher low and then retest and fail to break above again, that tells me that we might be moving back to the downside, but we didn't though. If you look, we closed below and we immediately came back up. Closed below, immediately came back up. Closed below, immediately came back up. These are fake moves to the downside, fake moves. Okay, you're generally still consolidating. Still consolidating. we finally make that push up above that area of consolidation, above the high that was previously made, then we keep on going. It's back to the same shit again. So now we make a low right here, and this time it's a grind, makes another high, consolidates again. Notice that it never breaks below the higher low that made that last high. But what happens this time? Okay. Now something interesting is about to happen. Okay, and this is personally even myself, this is tough. Okay, it's to identify when that reversal is finally going to happen. Okay. But it's not that tough though. You just gotta focus. You gotta lock in. Okay, so look, here's my high that was made right there. And then look what happens. We get the push up to the upside off of the higher low, but we failed to break above the previous high made. I'm gonna say it again. We failed to break above the previous high made. Okay. We get this doji-like candle. This looks like a bullish candle that looks more like a reversal candle to me. Then we finally get the engulfing to the downside, get a second one, and then we start getting signal after signal after signal that lets me know this is about to sell. We get the cross of the 50 over, or the 4 over the 50, over the 100, over the 200. We got a MACD sell signal right here. So this is the classic sign of a reversal. And not only that, if we look at it this way, all right, because I haven't even talked about using your order blocks yet. If we look at it this way, technically that candle is considered an order block. Remember what I said about order blocks a couple of videos ago, is that the last bearish or the last bullish candle before a move to the downside is considered an order block. It can be an area of rejection. And if we look, we have plenty of reactions off of that spot. We have one here, and then it looks like it came back up and just barely nipped it right there. Okay, before we got the sell signal. That's an order block. Order blocks are very, very powerful. Okay, so this time that high is not broken. So we failed to clear that high, which means this is not a successful high or low. It's not protected. And at the minimum, what we can do here is, if you want to get in early without the other confirmations, you could possibly take a short sell. You could possibly take a short sell with either your stop loss above the rejection or your stop loss above the previous high. First targeting that low right there. Again, that's not the best risk to reward ratio, but it is still a little bit over 100 points, which is generally a TP1 for me. But if you would like, you could also put your stop slightly above that high made, and that gives you the 1.1 when risk to reward. But you know that if we break this low, okay, we're likely to take that low out. And we do, and now you're sitting at a 2. Okay, we know if that low is taken out, we're likely to take out these lows made here previously, and this one made here, and we do. So just knowing when the market is making higher highs and higher lows is very critical to you having successful trading setups, highly probable trading setups, because nothing is guaranteed. But just off of that fact alone, I knew that since we did not clear that previous high, now at this point, right? And how do I know we didn't clear it, right? Because when you're looking at the chart, you're not going to see all of this information. Okay, what you're going to see is you're going to be like right there. Okay, that's where you're going to be at. That's where you're going to start looking at, and you're gonna see that we still closed below, but there's still a chance that we can close, that we can keep going. This trend is not done yet. Okay, this move is not done. So what tells me that we are likely to move to the downside is when we get that big candle, that first big candle, that engulfing. The engulfing candle is your best friend. Okay. It's a sign of things to come. When you see an engulfing candle that follows a reversal type of pattern like this, it is your best friend. It's a sign that other things are about to happen. Okay. So you see the engulfing, and now you immediately know that we're gonna have to come back to this area at least. Okay. And if we break below that area, it's definitely gonna have to come back here. And now I can just target every low. Okay. Until I see something that tells me it wants to come back up to the upside, I'm selling now. I could sell. Oh, where's my play button? There we go. I'll play that out. All of my EMAs turn over on each other. So I got the crossover, but not only did I get the crossover of all of the three, but all three of the primary EMAs turned over on each other. So that lets me know it's going to keep selling. And from here, I'm looking for maybe a continuation entry. Maybe it happens, maybe it doesn't. I don't know. I don't remember this. So yeah, we did get the continuation entry. We came back up, this time to the 100. And now we're making, I'm just going to fast forward all this now. No, I just realized it. Just add a replay mode. Where you at? All right, there we go. So now we're in the mode where we're no longer making higher highs and higher lows. We're making lower lows and lower highs, right? So we had a failed move to the upside. Now we make a low. We make a lower high. And how do I know it's a lower high? Candle action, right? This is why you need to make sure you watch that video on basic candle structure. So you get the doji, you get the engulfing that follows the doji. We got a MACD, a fading out MACD. It's still bullish, but it is fading to the downside, which means that these histograms are light, and this MACD is curling over on itself. We get the engulfing, and we get a sell to the downside. Sniper entry right there. Beautiful, beautiful entry. You could have easily got in on that candle. What I normally would have did was, if I didn't want to put it right above there, because that is pretty close, I would have put it maybe like above that area right there. Beautiful, because I know that we have to take that low out right there. And we do. We do. Okay. It looks like we got all the way as far down as close to this low right here. So right there, that alone was a 4-to-1 win ratio. That's if you put your stop right there. If you really think you bad, then put your stop loss right there. Now you got 6. Beautiful, beautiful beautiful entry. Just nasty ass trade. Okay, so we get in there, and that's a higher, or excuse me, a lower high. Come here, it looks like we got a reaction off of that low made, but we failed again to break above the previous lower high to try to indicate a reversal, and we sell again. But I think that's the entry. That is the entry right there. The continue. I would have stuck with that one. Anything else here is just more of like a consolidation. I call this either a bearish flag, or some people might call it an EMA squeeze or a bleeding sock. I call it I technically call it either a flag or a squeeze. And the reason why I call it a squeeze is because price, if you notice, is just flat. It's just flat as hell under my EMA, but my EMA it just keeps coming, right? So my EMA is trending downward, and eventually these two things have to meet. So price will meet the EMA, the 50-day EMA, reject to the downside because it can't break above it. And then we'll get the MACD sell to indicate that that is a valid rejection, and we'll get even more. So you could have got in here at 44,100 and made almost 400 points while risking a little bit over 50. Nasty trade. Just absolutely nasty. So what happens next? Okay. It looks like we made it low. We got one more sell entry in here, okay? Because again, like I said, if you don't break above that lower that previous high in a downtrend, previous lower high, you could be looking at another sell. You just have to confirm it using other tools, right? So your first tool should be price action. We get the candle moving to the downside, and then we get that to follow. But what's the next thing that I look at? I'm looking at my MACD. Even before or as that candle is forming, I'm looking at this MACD and it's fading to the downside. So I'm losing bullish strength from this trend because I'm nearing the previous lower high, or the previous lower high that was made. I get the engulfing candle to confirm that that is possibly going to be a strong sell signal. It closes and I sell. Easy. This is easy. You get down and we almost touched that low, the complete low, but you probably at this point you probably would have took profit at some time. At that point, it's just about managing profits. Here, it looks like we came back up, and this was, I guess, Wednesday. Am I on Central Time or? Yes, okay. This is Wednesday at 7:20. What was that? That must have been CPI. Maybe that was CPI at 7:30. Wednesday at 13th. I got to look back at what happened on Wednesday, but it looks like we're coming back up. We had this huge gap to the upside where we broke over this high. So it's like, okay, hold on a minute. We might be looking to carry up to the upside, but again, you still have to get through these highs here to confirm the presence of a strong uptrend. And we don't. I mean, this wouldn't have been a bad move to take, but you still have to rely on other tools, right? Like your price action and your MACD. So if you look over to your left, that spot right there is if I break this high, then I have to at least come to this spot. So yes, you could have took a buy, but I don't think it would have been safe to do that. But I mean, you could have did it, and you could have just targeted that high for TP1, this high for TP2. But I do not think that would have been safe to do because we still have to consider the fact that we have this high and this high to clear before we are considered completely in a textbook uptrend, right? So we failed to completely break above that one, which tells me that if you were in a buy because we broke that high right there, then it's time to get the fuck out. So you get out, and we start seeing reversals here, reversal patterns, and you probably could start taking sell entries because your MACD is back pointing to the downside while you're getting those reversals. So I have confluence, and slowly but surely, that zone, it looks like that zone for a while was a strong area. That was a strong spot. So because we came all the way back, that was Wednesday during New York session, Thursday into London session, and right before New York session, we came back and tested that area one more time, and we rejected again with what's that candle called? An engulfing, my favorite candle. So we get the engulfing to the downside with the MACD to the downside as well, and we break below and immediately sell even more. Just beautiful. So what's missing out of all this? What am I going to close out with? So what I'd like to close out with, and I think I should have probably started with this, but we'll go ahead and talk about it now. I really want to talk about top-down analysis. So that's another reason why I probably wouldn't have took a buy right here, because I'm pretty sure between this time and we'll say this time, I'm pretty sure that on the higher time frames, my trend was definitely bearish. Okay, so this is the 5-minute time frame. I use the 5-minute time frame to get sniper entries within the larger time frame, right? So the way that I start every trade, okay, and I learned this from one of my mentors, is by starting at the higher time frame, whether that be the weekly or the daily. Usually it's the daily. When I start the week, I look at the weekly, but in the middle of the week, I'll look at the daily. So let's look at the daily for now. Oh, that's March. Okay, we're looking at right here. I don't think I marked it. So that was, oh man, let me go back. I got marked there. So I got that one marked. So that's the upside of it. Let's do this one. I'm just marking this so that way when I go to my higher time frames, I can find where I was at. And I'll put it in red. Let's put you in red so I can see exactly where the hell it is. All right, so this is the 5 minute time frame, right? But what if we had started this by looking at the daily, right? So if we're looking at the daily, which is right there, okay? Now we know that the overall trend on the daily, right, is a down or is in an uptrend, okay? But the thing about using higher time frames is that it depends on what type of trader you are. If you're a swing trader, then you might want to start with the weekly and then use the daily as your entry points, right? Because you might want to take entries on the lower highs, or excuse me, the higher lows that are made on the daily, right? Just like we did on the 5 minute, on that uptrend on the 5 minute, you might want to utilize the higher lows on the daily to make your entries, right? Because it works the same way. If you notice that the price action is the same, it's just a higher time frame. These candles just mean days; they don't mean 5 minutes a piece, right? So that does not mean though, if you're an intraday trader, that and you want to use the 1 hour and 5 minute, or you want to use the 1 hour and below, with your 5 minute being your area of entry, that you cannot take advantage of price action occurring on the daily within an uptrend. Okay. Because the moves are still going to be significant. All right. It just depends. Like I said, it just depends on what type of trader you want to be. If you're an intraday or a scalper, this video would be more, what we're talking about now would be more geared towards you, because what you're going to do is you're going to look for within that uptrend, when that higher high gets made and you see the engulfing to the downside, okay, we know that we are likely to follow that engulfing with more moves to the downside, okay? So the thing about an engulfing candle is that when an engulfing candle happens after a opposite trend, it is highly likely to continue whatever trend the engulfing is saying that we need to do. So it basically means that price is exhausted in the previous direction. So if we're moving to the upside and we get an engulfing to the downside, it can mean that we can follow that candle with more moves to the downside, as long as we have confirmation to confirm that, right? And in this case, my confirmation is the MACD fading to the downside. Okay. Where would be my target for this type of move? It would definitely be along this area here. If you look here, and I'm going to talk about order blocks again, I'm going to keep bringing up order blocks. That last bullish candle is an order block. And look what we get. Look where price reacts to. Beautiful. And then goes back up. Why? Because it's respecting the previous high that was made. It's all about support and resistance. Okay. Support and resistance. The new support is the previous resistance. That was a resistance before. We smashed through it, came back and retested, and now we're getting ready to go back further up. But if you're looking at just taking advantage of the smaller trend within the trend, right? Which is, I recommend just trading off of the trend, but it's different when you're looking at the higher time frame and you're trying to catch moves below that time frame. If you're on the 5 minute, then yes, trade strictly with the trend, because you can't get much better than that. Okay. But if you're starting from your daily, then you really rely more on individual price action more than anything, because your moves are still going to be significant regardless. So again, what we're looking at here is this engulfing. We get that move to the downside. So this candle alone tells me that the trend following that candle is going to be down. I look at my 4 hour. Let's look at the 4 hour. So it looks like that's where that let me see where that day starts. Hold on a minute. So Monday 5 a.m. we would have closed That's Tuesday, 5 a.m. Where's the last? Okay, so this is where we closed at on the 4 hour. And you can see here, it tried to come up here starting Tuesday, but we closed pretty low. So what that type of candle means is you've got this, you started here and this is as high as you got. Your wick, you got a pretty good wick on there, which means that you reacted to some, you can't see it here because it's probably on the 1 hour or the 5 minute. Actually, I think this is, yeah, that area that I marked on the 5 minute, but on the lower time frames, there's an order block there within this candle that we reacted to. So the fact that this candle started strong and finished weak tells me that we might end up on the next candle moving down, and we did. So my 4 hours already telling me, based on this candle here that follows after this one, my 4 hours telling me that we're possibly gonna be looking at a sell soon. If I look at my 1 hour, what's developing on the 1 hour? Again, where is, okay, so here's the close. Oh, there it is. That's the last candle. That's where we closed that on Monday. Tuesday, it looks like we started out high. We're looking to try to take out that high. We failed. Not an engulfing, but we did break that area of consolidation, which is significant. So we break that area of consolidation. And I'm looking at not one, but two solid moves to the downside on the 1 hour so far. And then from the 1 hour, I usually will either look at the 15 minute or the 5 minute. What I'll do. So again, going back to where that move closed on the day, it looks like, and I'm looking at my time down here. It looks like we close again right there, and I'm just continuing to zoom in. I'm looking at the same exact move, but on different time frames. This is for you, to show you. Okay, so on the 15 minute, this would be the order block here. The order block is always the size of the entire candle. There's the 15 minute rejections happening. So you could have started taking entries here if you want to enter off the 15 minute. Me, I prefer the 5 minute. I mean, the reason why I prefer the 5 minute is because on pairs like US 30 that move really fast, I like to be as precise as possible. As long as I know what the daily 1 hour, 4 hour, and 15 minute look like, then I'm confident by the time I get in on the 5 minute. So again, I can go back to where we started on Monday's close. So we closed Monday, started out Tuesday session, consolidating as usual. And during Asia, we move up. And in this case, the order block, and you see how precise, you see how precise the order block gets. It gets up to right here this time, because that's the last 5 minute candle. We come back up and we reject almost to the T, and then start making lower highs and lower lows for the continuing move to the downside. So the point of this, the key takeaways from this video, and I hope that I didn't go too fast, but the key takeaways from this video are noting the trend of the prevailing trend of the market. Okay, the prevailing trend of the market is the way that you want to trade. You want to trade into the trend. You don't want to trade against the trend. That type of strategy will depend on what time frame and style of trading you're choosing to go with, right? So if you're a trader that wants to be a swing trader and you want to start out on the weekly, that previous example of using the lower lows and lower highs, that might not work for you, because technically that's a trend within your trend, right? So we're up on the weekly. We're going up on the weekly, making higher highs and higher lows on the weekly. So I honestly think that US 30 is very bullish right now. I think that we are extremely bullish based on the fact that we just made a lower high, followed that by a engulfing candle, came back to retest the highs previously made in October, and followed that with an engulfing candle. So I would believe that we have one more push up to the upside first. If we look at the daily, what I noticed that's different about, so if we look at excuse me, what's the same is that every time we approach a higher low, my MACD comes in to support a move to the upside. Okay, here it is here. It's like clockwork every time. Every time. This time it took a little longer, but it still happened. This time it happened. It happens every single time. Every time that I make a low, here comes the MACD to save the day and let me know that buys are coming. All right. So even here, the trend is down, but it starts to get pretty weak as we move up. So that was a grind up. That was a very strong signal to the upside. We got a strong rejection and we moved up. I mean, you get the point. All right. So this is the daily out of the weekly. All right. And then, like I said, you probably would be looking for an entry off of the 4 hour if you're a swing trader, off of the daily and the 4 hour. So it looks like to me, we've broken the recent high. We might want to let this come back and retest, maybe even close that gap that was made. But we got to watch that area very closely. If we break below this area where we just gapped up to and take out this area of consolidation, we might be looking to start selling again. Okay, but I would want to see other things confirm that that's actually going to happen on my MACD. So that's the other takeaway is using top-down analysis. If you're a swing trader, you might want to start at the weekly, use your daily and your 4 hour, maybe even your 1 hour to confirm the best entry possible for you, based on where your stop loss and where your take profits are going to be. If you're a scalper or an intraday trader, you might want to start with the daily, work your way down to the 1 hour, and then finish off your final touches of your confirmations with your 15 and your 5 minute before you choose to take an entry. But the point is that it always goes back to, am I making higher highs and higher lows on that highest time frame? And then is that same pattern prevailing throughout the lower time frames to give me that solid entry? And where do you put your stop losses in TP? So I mean, like, if you go to the 5 minute example, the way that I normally operate is if I get this entry, well, yeah, if I get this entry right here, okay, which marks a low, then you likely, and then I notice this is New York Open too, you likely can put your stop loss right below that candle as soon as it closes. And that's gonna, if you notice, that's gonna be above your entire consolidation zone. The safer spot to put it would probably be below this low that was made, the previous low that was made before that area took off. But since this is the first entry in the trend, you could put it here. The safest entry would be after you made that high and you consolidated, we showed support, and now we're ready to take off. And that depends again on the price action, right? So it looks like to me that we did make another high, but it doesn't look as strong as I want it to look. My MACD is not technically completely bullish either. I like it more in this area here where I'm getting a complete buy signal. Wouldn't be one engulfing candle. It looks like to me we had a few candles before we broke above that rejection candle to the downside. So right here would probably be where I'd want to get in. We could get above right here. I can put my stop loss here, noting that I need to watch this area. So I'm probably going to watch the charts until we get above that area. And as soon as we get above that area, I'm pretty good that I'm pretty confident that it's okay for me to step away now. So as soon as we step away, we're able to we're able to walk away from this type of trade with comfort, just being comfortable because we just broke that high there. We know that we're probably going to retest it, which is we do, and we continue moving up to the upside. So yeah, my stop losses and my take profits rely on my stop losses rely on previous price action before my move, and my take profits like to rely on future price action. So where would my take profits be in this area or in this type of entry? Well, if I got in here, I know that I have to watch this spot, and I know this spot is also an area that I have to watch, but they're also not deep enough for me to consider that to be a full take profit. My full take profit probably would have been around this area here, which would be the next. If I look, I'm looking for areas that were previous resistance levels. My take profit levels are always going to be areas of a potential reversal, whether that be a support or a resistance. So these are previous resistance levels because I can see that price got hung up in those areas before and in this area. And then that would definitely be probably my second take profit or even this area here. So it's all about capitalizing on moves that previously happened. Where it gets a little bit tricky is when you're in a spot where there's no previous price action to target for a take profit. Right now, we might have a stop loss. If we entered in a buy today off of the daily, which is I still don't recommend because we are a little bit overextended in my opinion, but it looks bullish as fuck. I would want to wait for this gap to be closed and for us to respect that gap with a wick to the upside. So I want to see something like this, a daily candle with a wick on the end of it, noting that we did come down to that area and we respected. My stop loss, where's my stop loss if we entered somewhere in this area would probably be below that engulfing candle there. Okay, or if I really wanted to be safe, below the previous candle before that move started. Now my TP is going to be very tricky because like I said, we do not have any other areas for me to target. So this is where you kind of got to make a choice. You can take the chance and take the buy. Me, I really like to take trades where we enter in from a higher low, like here, and we can target. That's money for me. So we come down to that EMA, that's a support level as well. And we see the MACD turning over, we get the entry, and I can immediately target going back to the area of resistance. That's solid. It's a solid setup. But here, I don't have that luxury. So what I would have to do, and I haven't done any videos on this yet, is I would have to look at my Fibonacci levels. So in another video, I'll go over, probably my next video, I'll go over Fibonacci. And Fibonacci is a sequence. It's found all throughout, not just in trading, but all throughout nature, actually, where different levels in that sequence are significant. They're significant levels, and those levels happen to be the 100, the 61.8, excuse me, the 38.2, 61.8, 100%, 131.8, and 161.8 percent levels. And what that actually means when I say percent is that this right here would be what you call an ABC Fibonacci or a trend-based fib. That's a tool that you can use on a TradingView. What you want to do is in this type of pattern, you want to use the low that made the previous high plus the higher low that followed that previous high. And that's going to tell you where price is likely to go next. Okay. And what 100%, I believe what 100% would mean is that it is going to be 100% of this extension. So if my logic behind that is right, let me use get a calculator. Hold on. So we're gonna go from 41,632 to 44,506, right? So is that right? Hold on. Yeah, 41. Okay. Okay, so 3,000. Okay. So if we go 3,000. Okay, no, it's not 100% from the high. It would probably be, it looks like to me it's 100% from this level. So maybe it's, oh, am I doing that wrong? Did I measure it wrong? Okay, shit, my bad. The high, that's the high right there. So actually it's 44,442. My math is off, guys. So 44,442 minus, zoom in here. And I'm gonna stop because I'm getting way ahead of myself. But 41, 632. All right, so it's actually like 28.10. So if you add 28.10 to 43.45, yeah, 45,821. Okay, so sorry about that. So it's an AB, this is an ABC fib. And what you want to do is like I said, you want to use the higher low that made the current higher high. And then you want to connect that to the now lower high, the most recent lower high. That will tell you where you are going to be 100% extended from that lower high, 61.8% extended from that lower high. When I do my math, and this is, I mean, I'm eyeballing where that top is and where that low is. I got 45,821. The 100% is 45,872. So I'm off by about 50 points. Cool. But like I said, this is 100% past that lower high or that higher low. This one's 61.8. Typically in an uptrend, I will target the 100, 1.382, and 1.618 levels as my primary targets. And I will continue to follow my MACD and any type of signals that I see on my lower time frame to confirm whether that is going to continue moving up or whether I'm gonna start to get a downside move. I'm technically I'm a little bit paranoid at this point because like I said, we're pretty high up on US 30. But what I notice is different from these peaks is that in the past, and you always want to look at your previous areas where you want to look at every spot like your high, you want to look at every previous higher high and you want to look at what the pattern was, right? So if I look at every higher high, my MACD was pointing downward every time. There, 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 and there. But what do I notice as we get to this higher high? We're not only bullish, but we have a fresh bullish signal. So that tells me that we are likely to make a move to the ups. I think what's going to happen is if I pull back out my trend-based fib, I think that what we are going to see, and I think I probably just screwed up. Probably off. So see, yeah, let me move this out of the way. Hold on a minute so I can actually see. Sorry, guys. I just want to make sure this is right. So yeah, here's the low, here's the high, and here's the high low. Okay, cool. So actually it's 45, it's like 45, 741. So like I said, I was eyeballing this, but if you look here, these are the levels that I would want to target. And if I look here, my MACD it's freshly bullish. So that's another thing I pay attention to is it's not bullish as in this area right here where we were definitely looking for a move to the downside and we got it. But this move is just starting. It's just happening. So that tells me that we're probably going to get a push, maybe up here to the 786, maybe straight up to the 100 before a massive rejection because we are pretty overextended. Once we get that rejection at one of these levels, then I'm looking for a further move to the downside, and we've got to start watching close for any type of signs that we're going to start making lower highs and lower lows by breaking these support levels down. So, and that would be considered breaks of structure, by the way. That's what that's called when you make that reversal. But anyway, I think this has gone on long enough. I think I was able to cover what I wanted to cover. At this point in time, you should be able to identify plenty of examples where you can identify higher highs and higher lows, lower highs and lower lows in areas where you might see a potential reversal from one pattern to another by using tools like your MACD or your RSI to mark where areas of price are overbought or oversold. And you always want to use that in combination with what your candles are telling you, because these candles tell a story. I think I'm going to end off there, guys. If you guys like my content, feel free to like and subscribe. And I'm going to leave I'm going to go ahead and leave my affiliate link to Funding Traders in the description. So if anybody would like to start trading with Funding Traders, who is a prop firm where you can keep 80% of your profits on a large account that you manage, feel free to go ahead and click that link and subscribe. They have account sizes from ranges of $5,000 all the way up to I think $500,000. And right now they have a 50% off promotion going on. So I do recommend that you practice quite a bit and you master your style of trading before you do that. So don't be too hasty, but I am letting you know that I am promoting that now in my description. So thank you guys. I hope this was helpful. I'm gonna go ahead and end this off. Peace out. One.